Everybody, welcome to a new episode of how to start trading. This is the third one and the last one. I hope the first two were enjoyable and at the same time helpful. So today we'll discuss about how many kind of trading are existing in the market. First of all, we got the day trading, swing trading and investment trading. Day trading is very simple. You are buying in the same day, or maybe you are going short. You are buying what is happening. For example, this company here, ISPO, this is a ticker. The ticker means the short name of the company. You got Inspirato Incorporated. I don't know, it's a funny name. Anyhow, you are buying here at 6.13 and let's say you are selling at 9.31. So you are buying to own and you made a profit, let's say, of 3 on the price and you are selling here at 9.31. Okay, or maybe you are going short from 9.30 to 7.66, but all these operations are happening in the same day. Okay, not 2 days, not 3 days, in the same day. That's why it's called day trading. Just remember and take notes. What else you can do? You got swing trading. For example, you are going from July 29 to July 30 or maybe July 31. Swing trading is about 5 days, so you stay in the same day, in the same trade for 5 to 7 days, not more, maybe less, but it's always above 1 day. So from today to the next one, or from today to the next 5 or 7 days. This is swing trading. Either you are going long or you are going short. So you are entering in a position today and you are exiting tomorrow, maybe after 5 or 7 days. This is for the busy guys. So you don't have to enter every day in a trading. Okay, in a position of trading, maybe long or maybe short. But if you are busy, I don't know, you are occupied with something else, you got to pay attention when the market is opening at in the morning, at 9 o'clock in the morning. And if you have any opportunities in the first 2-3 hours, you are entering for day trading. But for the swing trading, you got to have, let's say, a runner. What do I mean by a runner? This have to go up at least 2-3 days in order to short it, or you go here on screener. It's quite simple, okay? And you are looking for what went down or really down in order to be very good to be bought. But generally, please don't trade shares that have a price below 2 because they are very dangerous. And this we'll discuss in another episode where we discussed about the price strategy. Okay, for example, this one here, you got to have also a very good, let's say, billions. Okay, it have to be of couple of billions the market cap here. So this went down, as you can see, from 35.61 to 26, and generally if you have a market cap above, let's say, 4 billion, this can be very good to be bought. But there are different scenarios for each kind of trade. And further on, we got investments. That's the third type of trading. Okay, you are talking about couple of months. So you are buying today and selling in a couple of months. For example, on this one, you have bought here at, you got the date here, yeah, in June 2022, and you sold it, let's say, on November 2023, and you made a difference of from 943 to 52.6. So it's quite a lot. Maybe you become quite rich. So these are the 3 types of trading. What else you have to know as a beginner? What we've discussed here is about stocks, but you can trade also futures, forex, crypto, okay, indexes. For example, here, what we got here, okay, this is trading view, and the other one was FinViz. You got stocks, funds, futures, forex, crypto, indices, bonds, and options. Options, let's say, is the most profitable type of trading, but you got to learn quite a lot about stocks and about shadow patterns, because everything is about shadow patterns. For example, in indices, you got US 30. This is the most common one, and we are giving VIP signals every day. Okay, you can go long, you can go short, I don't know, you can play around, but please be very careful with this one and how much you are allocating this one. If you don't want to trade this one, you can trade this one DIA. Okay, that is imitating US 30 and is the ETF, Exchange Trading Fund, for US 30, and you can play DIA on options that is similar of trading US 30 directly. Okay, I hope this is very useful. At the same time, you can trade US 100, that is this one, but this is quite expensive, and if you don't have enough cash, you can go here and trade QQQ, that is imitating US 100. Okay, it's very easy and very simple. You can trade QQQ on options. Okay, what else you need to know? You need to learn a lot about risk management, because without a risk management, please don't enter the trade. If you are lazy, if you don't want to learn what I'm teaching you here, please don't enter the trade. Okay, keep your money safe, go party, go drink something, or spend it with your friends. Risk management is about the allocation. First of all, how do you allocate in a trade? For example, we got this trade here. Let's suppose you are going short from 465 to 454, and we are entering the trade with 2% here from our account, another 2% here, another 10% here, because it's about confirmation. You need a confirmation. 10% here and you are stopping. Okay, don't enter with more than 20 to 30% of your account, because you need to be covered if the trade is going against you. What else you need for yourself? You need to monitor your trades. What do I mean by this? You need something like a journal, a personal journal. You are writing everything you have done during the day, and in a column, and in the second column you are writing everything you have felt for each trade you have taken in that day. It's very important at the beginning to make some mistakes, because you learn from mistakes, not from your successes. Also, let's talk a little bit about news. Don't believe the news. You are a retail trader. You are not an let's say, how can I call it, rich, somebody very rich that can allocate something like 50 million, 100 million and so on, an institutional investor. Sorry, I'm trying to improve my English. So what you need to know is don't believe the news. And generally, if you are a retail trader, please use only technical analysis for prices under 20 US dollars and in between 20 to 60 US dollars with a market cap above 500 million. Combine technical and you got to look on the financial statements a little bit to understand what is happening there. For market cap above 4.5 billion, you can go for fundamentals, let's say in a proportion of 80% and 20% technical. And also, please be very careful how you allocate your money, as I told you. I hope you enjoyed this episode. Please like, follow, and get those links there, because they are gold. Thank you, and see you on the next episode. Daniel out.